new development, I must use that word. Before we delve into what this new construct and development is, I would want to take this opportunity, though a slightly delayed opportunity, to wishing everyone a very happy new year. Wish this new year brings you happiness and good health. Uh, as most of us would be aware, over the last few years, the large cap space in the capital markets has kind of lacked the interest that has been shown towards the mid and small cap side of the market. But over the volatility that has happened during the recent months, there is renewed interest. There is incremental dialogue, discussions that had suddenly been started happening back on the largest space in the equity markets, which is the large cap space. And most of us have the allocation towards large cap through direct equity or mutual funds of various structures which operate in the top 100 stocks and hence classified as large cap mutual funds. But it might be a possibility, and we will talk about the possibility that within that large cap space, there could be a piece, a critical piece that we might be missing while we are looking at our current allocations. To talk about how do we take benefit of that missing piece within the large cap space, today I have probably the best speakers to discuss on this. Someone who represents the manufacturer of the index, and another gentleman who represents the manufacturer of the products on this index. So it's my honor and privilege to welcome Mr. Ashutosh Singh, who is the MD and CEO of Asia Index Private Limited. Asia Index Private Limited is a fully owned subsidiary of DSP India, which most of us would know is the largest and it is the oldest stock exchange in the Asian subcontinent. Along with Ashutosh to talk about this topic today, I have Mr. Anil Ghelani, who's a CFA chartered holder. He's a senior vice president at DSP Mutual Fund and is responsible for passive investments and products. So, without wasting too much of the time, I think I've set a very short.
Recording in progress.
I would directly move on to start the discussion. The first point that I want to highlight is, and I've touched upon while I opened the session, is given the recent volatility, there seems to be a renewed interest in the large cap segment. What are your thoughts on large caps as a segment right now? Anil, if you would want to cover that.
Sure, I think very good background you gave the our viewers, Gurjeet. Friends, I think today, if you look at the way in which markets have moved in the last 18 to 20 months, whereby we have seen a very sharp rally coming across in mid caps, small caps, in certain specific sectors or themes, very sharp rally basically. And in some way, during that rally, one was on an ongoing basis feeling the lack of similar participation by many of the large caps of the market. Hence, when we came to so-called peak of the market, after which the correction started, which was somewhere during September of 2024, at that point of time, the valuations of the large caps compared with the broader small and mid caps were very divergent, and very meaningfully one could have a vision on it that, okay, this seems that in a much more sweet spot in terms of valuation. Now, after that, from let's say October, over the past couple of months, in the correction which we have seen large caps further correct by about 10-11% if I look at the certain broader bellwether index of the market. So what was looking in a good way relatively attractive in terms of valuation comfort during August, September. After that, we have seen further correction. So looking at that, today, if you look at the way in which the large cap universe is positioned versus the small caps and the mid caps, I think it's in a very attractive sweet spot. And even in the last 3-year performance, if you look at it, and if I just compare it with a very broad level index number of, let's say, BSE 100, which is a universe of the large cap, over the last 3 years, it has given a CAGR return of around 14%. Whereas another index of the under the BSE umbrella called BSE Mid Small Cap Index has given 3-year CAGR of 24%. So it's a huge gap of around 10% 3-year CAGR that the large cap universe is seeing a bit of a relative underperformance. So I believe in the context of this situation where we feel that, yes, there is a correction which we are observing. Yes, there was a very sharp rally in mid and small cap, because of which the correction in mid and small cap seems much more amplified. In such a situation where large caps were appearing relatively good in terms of the valuation comfort, they have become even little bit more sweeter in terms of the levels at which they are currently available. So I feel that yes, there is a renewed interest in the large cap segments, and I feel that amongst the overall allocation that you are looking for equity right now, maybe allocating to large cap could be a very good opportunity.
Fair. So setting your responses as the foundation, I have another question to you, Anil, which is
Sure.
considering relative valuation and post this correction, it seems to be a good opportunity to allocate money towards large cap. But for our investors, can you throw some light and highlight what are the options available in the large cap space for investors to invest in? Is there a differentiated large cap idea that we are bringing to the market right now for people to participate in the large cap allocations?
Friends, I think whenever we look at large cap allocations, of course, one always has the option that, okay, I will go and pick and choose 4, 5, 7 large cap stocks. They are all very well researched companies. And look, I am also a very well informed investor. Everybody thinks like that today. And in a good way, yes, that's a way you should be. If you are investing, you better be well informed. But structurally, in addition to this kind of direct stock investing, other options available are investing through professionally managed portfolios, of course, within which there are a couple of portfolio ideas which are available in the form of index funds or ETFs. And one such ETF and index fund that we are bringing to the market just now is the index fund and ETF, which we are launching on the BSE Sensex Next 30 index. So I'll just take a very brief minute to describe what this does and why we believe it is differentiated. Otherwise, just based on the name, nobody will get a sense of it. People will say, yeah, it's just some another slice of the large cap market. What do I do with like next 30? I already have something else which is called next something else, or first something else, or last something else, or top something else. Now, what is this thing called? BSE Sensex Next 30, and why I feel it can be a useful addition to your large cap allocation. So in very simple way, this particular index has a very different positioning in terms of the risk and return, because it has a very different positioning in terms of the sectoral allocation that it contains. No doubt, some of the stocks will be common if you are owning, let's say, large cap universe. Then yes, definitely there is a finite set of 100 companies. We are giving one slice of it. But the way in which the design is made, the way in which the allocation to the certain sectors which are otherwise not represented in a large way in certain other bellwether indices, like for example, BSE Sensex, so there's another index called BSE 100, or similar other products which are bellwether large cap indices. And if we see the overlap, I think this has a very good positioning, well diversified portfolio. So we feel, looking at that, it can be a very differentiated, at the same time, good idea from the valuation perspective currently. Sorry, your line is on mute, Gurjeet, so I couldn't hear you.
Isaac, thanks. And I would probably now want to directly hear from the one who's constructed this index. So Ashutosh, over to you. And can you please throw some light on the construct backdrop and why really BSE Sensex Next 30?
Surely, Gurjeet. So, firstly, thank you so much, Gurjeet, Anil, Team DSP, for putting this together. And I would also like to take this opportunity to convey my New Year wishes to all the participants on the show. And now, diving straight into your question, to give you some background, so you mentioned that we are a 100% subsidiary of BSE. So, in fact, we became a 100% subsidiary of BSE only in June last year. And Asia Index was incorporated in 2013 as a 50-50 joint venture between Standard Poor Dow Jones, which is obviously a global leader when it comes to benchmarks and when it comes to indexes. And BSE was the other 50% shareholder. So BSE completed a transaction of buying out the S&P stake in May last year. And this index obviously is very close to heart. This is the first index that Asia Index launched as a wholly owned subsidiary of BSE. And like like the oldest index in Asia, which is Sensex, consisting 30 stocks, even this one is comprising 30 stocks. And like Anil very eloquently uh, uh, put forth how this index made or how this product makes a lot of sense. When we were working on the first index idea, we too were thinking about the large cap space because the reasons Anil has pointed out already. Since we already seen a lot of run up in mid and small, uh, and before we decided, in fact, to go beyond the large cap space, we were trying to figure out if there are white spaces, if there are opportunities available within the large cap space itself. So we clearly felt that there was an opportunity because most of the other leading indices, whether you talk of the top 30, top 50, the next 50, the top 100, uh, the coverage that most of the other indices had towards the set of 30 constituents which are part of next 30 was anything between 0 to 25, 30%. So, we are talking about this set of 31 to 60 highly liquid scripts, highly traded scripts that also generally tend to have a better, profit growth. So the rate of profit growth also in this particular set was about 3% higher than the top 30 or the top 50. So we looked at many parameters and we clearly felt that there is an opportunity that exists within the large cap space. Uh, where investors, would anyone who's looking to diversify beyond the leading benchmarks could consider this index, and that's how this index is born. And and also to speak about the construct of the index, we did some back testing on the index, which was for about 10 years. The first value date was 5th August 2014, and the launch date also is 5th August 2024 for this index. This index is reconstituted twice a year. So, for the benefit of those who do not know what reconstitution means, basically, we look at the parent index, which is BSE 100 in this case, and the 30 most liquid scripts from the BSE 100 are chosen, which are also not part of BSE Sensex. So basically, the 30 most liquid scripts outside Sensex, that is 31 to 60, are chosen from this from the parent universe. And we also have a condition that these scripts have to have a derivative linkage. So these are some of the important things that we do every 6 months when we review the portfolio. The top 30 scripts outside the Sensex make it into the index. Obviously, there are some buffer rules. So by default, the top 24 outside the Sensex make it into this index, and the existing constituents, if they are ranked between 25 to 36 on the rebalance date, they continue to stay. The reason why index providers give some buffer is to avoid the churn, because churn obviously in the portfolio leads to slightly higher transaction costs. So, which is why most index providers will always have some buffer rules. So, our buffer rule for this particular index is about 20%. And yeah, so that's long and short. It's reconstituted twice a year. It's rebalanced 4 times in a year, and this index is based on free float adjusted market cap. So there are various ways of constructing an index. It could be on total market cap, it could be on free float market cap. So this particular index is based on free float market cap. So that's on the construct. I know it's slightly technical, but I'll be more than happy to take questions later on uh, and try to answer if people have any specific queries around these technical descriptions that I gave.
On follow up to the same point that we are discussing, Ashutosh, this is again a part of the top 100 large cap universe that we have. Why is it, or what is it that makes it a differentiated or a unique index? And your views, and then probably Anil can add his views on the same point.
Uh, so while it may be slightly repetitive, but I would still go ahead and try to explain this again. So in the large cap space, like we've discussed that there exists a top 30 index, there exists a top 50 index, there exists a top 100 index, there exists a 51 to 100 index. So while while most of the constituents were getting enough weightage across these indices, there are certain things that stand out in this index, and some of them naturally stand out. So, for example, if you look at the top 30 index or the top 50 index or even the top 100 index, the bottom third, or let's just say the bottom 10 stocks in the case of the top 30, or the bottom 10 or 15 stocks in the case of the top 50, have a very low weightage in the index. So basically, I think that number could be anything around 7-8% to about 15-16%. Whereas in this index, and that's happened very naturally by design. Uh, in this index, even the bottom 10 constituents have about a 26% weightage. So this index is fairly well diversified, where the constituents from 1 to 30, I mean the 31 to 60 constituents, each have a weightage ranging between 2% to 6%. So this index, at a practical level, doesn't suffer from some of the extremities of some of the other indices, where the bottom 10 constituents, if you go down to the bottom 10 or bottom third in the portfolio, you have weightages of 0.2%, 0.3%, which while you see the stocks in the index, but they do not really have too much of a say when it comes to the movement, the price movement of the index. So I think choosing these stocks has given us a very well diversified portfolio across sectors, across scripts, and even the distribution, weightage distribution is fairly good. And like I pointed out earlier, what we also realized is the rate of profit growth, the rate of top line growth. So while these constituents have a slightly higher rate of profit growth and rate of top line growth, they're doing this by showing very strong discipline on debt equity. So the debt equity of this particular basket on average is not more than 1.15, which is a fairly good number. So the higher rate of profitability and even your top line growth is coming through very strong discipline on the debt equity side. So these are some of the things that stand out in this index. I mean, these are the things.
So we're talking about relatively lower debt to equity, relatively better growth prospects, and then bottom 33% of this index having a weightage of approximately 25-26%.
Absolutely.
Which rather in most of the existing indexes is not really to the extent of 25%.
Correct.
So then any movement on this segment will have a meaningful impact on the portfolio, whether upward or downward, whichever the direction of the market is. Great. So Anil, your thoughts on this?
No, I think very interesting way in which Ashutosh outlined. To be very honest, the thinking behind it, it's not, in my view, correct me if I'm wrong, Ashutosh, it's not a smart beta or a rule-based product whereby there is some rule given that this company has to have low debt to equity. We do have certain products where there are these filtering criteria based on which only the company which has got lesser debt to equity will come over there. But as a part of its natural design of picking up the so-called large caps, but within that the sort of second order or the middle order of the large caps, which structurally are still very good companies, are sort of, you can say, leaders in their own sectors of doing business, and giving them meaningful weightages. And hence, at a portfolio level, the debt to equity that you described, I think it was a very interesting way to put it forward. I mean, to be very honest, I also have seen the data of each of those 30 companies, including the recent rebalance and the way in which their PAT and the balance sheets were looking. But this angle did cross my mind also. So I think thanks, Ashutosh, for raising it. It was a very interesting angle. So I think the way in which this index has been constructed, the way in which the simple idea, but with a indirect design, which is creating a powerful portfolio mix which is also a well-diversified mix. That's the important thing. Sometimes just having a very simple idea could at times, because it's free float based, friends, so it could result into few sectors getting disproportionate weightage. But I think over here, how Ashutosh mentioned, that the weight of each stock is also, broadly speaking or loosely, in a range of, let's say, 2 to 6%, and hence even the sectoral allocation is pretty well diversified. I think the largest weightage is to the sector which is about 19 to 20%, that is the BFSI sector, followed by consumer, discretionary, commodities, energy. These are all a little bit further down. So I think it's a well diversified portfolio across stocks and sectors, and I think that's something which makes it something good to own from a long-term perspective. So I feel that this can be very useful addition to somebody's portfolio, even if you are already investing in large cap, whether through direct stocks, whether through other actively managed funds or PMSs or something equivalent, or even through certain other index funds which are available in the market. This can be an addition to your large cap component with a very different risk return positioning.
Yeah. Ashutosh, I just wanted to understand, and it could be a question which many people would have in mind, because we're talking about a 30 stock portfolio. Barring a couple of segments of the mutual fund industry, if I take that as a benchmark, uh, ideally number of stocks are way higher, and the application of diversification hence comes in. So if I as an investor look at this basket, it is comprising only 30 stocks. So where does it leave me in terms of sectoral diversification? Am I going to have a concentrated allocation towards few sectors, or is it going to be equally diversified?
Sure. So before I talk about the sectoral diversification, Gurjeet, let me talk about the market cap coverage that we are getting through this index. So you're right. It is only 30 scripts, and there was some thought put in terms of coming to the right number, whether it should be 30, 40, 50, 20. So when the index was constituted, we were also looking at the kind of coverage we are getting through this index. While obviously diversity in terms of sectors and scripts was important, but we were also trying to look at an index that typically would at least cover 10% of the overall India market. So in this particular case, the market cap, now numbers could be slightly dated, but when we launched the index, the market cap coverage that we had for the index was about 57 lakh crores, which at that point in time was about 13 to 14% of India's total market cap. So while it is 30 scripts, in terms of the count, it may be less than 1% of the total scripts that are listed and traded in India. But in terms of market cap, we were getting a nice 12% coverage through this index. And coming to the sectors, the best part about, and again, I mean, like Anil rightly pointed out, it's not as if we have gone after, we've put these rules and we've gone after these rules to get the kind of sector diversity or to get the kind of script diversity that we have in this portfolio. It's just happened very naturally through just following very simple rules: 31, 60, FNO linkage, etc. So in terms of sectoral diversity, there are 10 sectors. Not a single sector has more than 20% in this particular index. And that again, I mean, if you look at some of the leading indices, financial services by by the way they by their economic contribution, market cap contribution to India, today in some of the leading indices could be as high as 30%, 35%. So in this index, through the, I mean, you can just call it happen chance. But yeah, in this index, no sector has more than 20%. And some of the sectors that are having very low weightages in some of the leading indices, like commodities, in this particular case, has a weightage of close to 17, 18%. There is consumer discretionary, which again has 18%, healthcare, which has about 10%, financials, like Anil rightly pointed out, has only about 18, 19%. So that's the kind of sector diversity you are getting. So basically, all the major sectors in India are getting covered with these 30 stocks. So while it is only 30 stocks, while it is only 1%, less than 1% of the total stocks listed on the bourses, but in terms of sectoral diversity, you're pretty much getting close to 100% through this particular index.
I would request viewers to put in their questions in the chat box if they have any. We'll try and take them up as we progress during the discussion. Carrying on from the same point, now we spoke about what kind of sectoral exposure we get, what kind of market cap exposure we get, but at the end of the day, what kind of index returns have we've seen over the past? I'm sure. I mean, those are past returns and in no way guarantee anything that will happen in the future. But still, if at all you can throw some light on what the returns of this index have been.
So yeah, thanks, Gurjeet. So I think let me preface my response by just reiterating your point. I mean, past performance is no indication for the future, and I mean, investors are obviously advised to consult their uh, distributors, advisors before they make any investment decisions. However, coming to the return bit, we've seen very robust performance. So, in fact, in the last 10 years, on a CAGR basis, this index has returned about 15%. And these are numbers as on 31st December 2024, calculated backwards. Last 5 years, the CAGR returns are upwards of 20%. Last 1 and 3 years, we've seen returns of 18% and 17% respectively. And even on the risk-adjusted parameters, I mean, accounted for volatility, this index seems to do pretty well compared to the other leading indices. So yeah, that's return bit. But word of caution: don't get too excited by past returns. There's no guarantee for this in the future.
Anil, I wanted to check on the timing of this launch.
Mhm.
So as Ashutosh mentioned, the index was launched last year, somewhere in August.
Mm.
And we've come up with both the ETF and index fund on this index. But what was the thought behind launching a product on this index at this point in time?
Sure. I think structurally, the way in which investors need to get some allocation to large cap, in my view, the way in which we have seen the recent correction, whereby, like I said, that after the sharp rally of the mid and small, which happened over the past about 18 to 20 months, and then we saw the divergence in the valuation comfort of the large caps compared to the mid and small caps. It was positioning large caps in a very sweet spot. And in addition to that allocation or that valuation comfort, we saw further correction. So, of course, this exact last 1-2 weeks correction was not really anticipated or envisaged with as precision. But to be very honest, let's say somewhere around, at the October, November, we were very much of the opinion that maybe markets will be a little bit in a sideways movement or in a kind of a consolidation phase. And at that point of time, wherever there is a higher comfort in terms of valuation, which was coming out to be the large cap space. So we thought that yes, within that, this can be a good way to give allocation to equities. And I strongly believe that today, looking at this valuation comfort, as well as looking at certain underrepresented segments of the broader market, which we are getting from this index, it can be a good starting point. And even if not a immediate lump sum allocation, it can be an excellent starting point to accumulate in a systematic manner, whether through SIP or STP, smaller components to build this particular core allocation of your large cap from your long-term financial goal perspective.
Sure. So on the same subject that we are talking about in terms of timing, I've broken it down to two questions.
Sure.
First is why would someone invest in this? First part of it, that principally, why would an investor want to invest in it, or why should an investor consider this? Second, and the more micro question is, I already have large cap allocation. Is there still merit enough for me to consider this fund or this index? So first is, why should I look at this index and invest in it? The second part being, I have large cap exposure. Am I still missing something if I do not own this fund?
So I'll answer first, and then maybe Ashutosh, you can also add, or Gurjeet, you can add something based on what you have been saying. But to be very honest, when the first time Ashutosh had spoken about this, and they had hosted a very big launch event in the Bombay Stock Exchange at the iconic convention hall. I was also of the same view. Well, yaar, boss, fine, okay. I mean, there are so many large cap indices. Okay, there is some other index provider who's got something called Next 50 because 50 is their nomenclature and their number. You have 30, so you are doing Next 30. तो मतलब कुछ समझ में नहीं, मतलब ठीक है आप कर लीजिए सर, मैं आ जाऊंगा इवेंट में, आपने बुलाया, यू आर माय बिजनेस एसोसिएट एंड पार्टनर, बिजनेस पार्टनर, तो डेफिनेटली आई विल कम फॉर योर इवेंट. But subsequently, at that point of time, when we looked at this in more detail, one thing which struck out to me was that within the large cap space, there are certain pockets which, let's say, for example, in other context, let's say active manager or a boutique fund manager giving you a PMS or AIF, maybe she or he can at different points of time look at and identify. But otherwise, there are various pockets or segments of the overall industry which are very underrepresented. And mind you, these are not some very small sectors of the economy which are not really meaningful in terms of numbers or size. These are very large so-called drivers of our current economic activity on ground that you and I can see. For example, I'm just saying, there is a leading retail apparel company. There is one of the largest coal producers in the world. There is one of the leading private sector life insurance company, which you and I might be using their products for our life insurance. There is one of the large hospital chains in India. So there is one of a large pharma company, which is one of the largest pharma company by volumes in our Indian domestic market. Now, these are all, no doubt, some or the other way included in some other large cap bellwether indices that are available. Today we also have various index funds under DSP's passive range available. But the allocation and the weightages to some of these would be very low as compared to what we are getting through the Sensex Next 30. Now, it by no means indicates that, yes, then this is the holy grail of investing, and just by allocating into these underrepresented companies, nobody's looking at these companies, buy it. No, that's not the point. These are large cap, big leaders of their industries or their sectors. They are very well researched companies. Just by the fact that they are large cap, they are well researched. But to package them in a index fund, which you can then buy through one tick at a relatively low cost without human bias. I don't want to create a human bias. Oh, you said that there was this one large two-wheeler company, and I thought feel that right now two-wheeler is not going to do very well, and the others are going to take over, and everybody is going to move to the electronic vehicles, and this company has done very low investment in that. I'll sell it off. No, this will not have any human bias of that sort. So low cost, simple, easy to understand, without human bias, good mix of some of these underrepresented sectors, which are very meaningful components of our daily economic activity that we observe on the ground. That, in my view, is the key point, which I realized after we did a deep dive, and hence we are very keen that let's create an index fund and an ETF around this and offer to our investor community. That was my frank thing. And Ashutosh, I know you might feel upset, oh, you came to my event with this intention that I'm not even going to consider. But yeah, that was the fact. But later on, when we realized, it became a powerful investment idea in my view.
No, no. At this point, I'm just happy that you've launched a product on this.
So I read somewhere, and not on a serious note, large caps playing in the middle order. So the larger guys playing in the middle order. So there are those largest guys within the large cap space,
Absolutely.
and the tail of the large cap. This is an area which is underrepresented in most of the broader indices. So there could be, let's say, a 10% exposure to a 40% exposure, but concentration of this
Yeah, exactly.
Gurjeet, I think
concentration of this section. I have a couple of questions that we've got from the viewers, but before I move on to the question and answer section, I would want to I request both Ashutosh and Anil to share your final thoughts on the index and the fund, and then we'll take up the questions that we've got.
Sure, Ashutosh, go ahead, please. You can
yeah,
talk.
okay, fine. I'll take the first stab at it. So Yeah, I mean, final thoughts, Gurjeet, would mostly be centered around the fact that this obviously was an index that we put a lot of effort in. There was months of research in trying to close in on the idea, uh, and the discussion started from whether we want to do a thematic, sectoral, factor-based index or broad market. So that's the first thing we considered, and then it we closed in on broad market. In broad market again, we were just thinking between small, mid, and large. And when we realized that there exists an opportunity in the large cap space itself, with good track record on back testing, with good future potential, from the points we made about rate of profit growth and debt equity and rate of top line growth. So it then became a no-brainer. I mean, obviously, to come to a point where it became a no-brainer, it took us about 2-3 months of extensive research. But then, once we had done that, it was very clear to us that this had to be our first index, and we are very proud that it's getting good reception. It's getting very positive feedback in the mutual fund community. You guys are launching it first, and I'm just hoping that there'll be more that are lined up, and that will obviously be launching products on these in the future. So yeah, so my final thought would be for any potential investor or for anyone who's looking at doing an asset allocation at this point of time, and once he's decided on equity, and once he's in equity for all the advantages which Anil put forth so eloquently, if he's decided on the large cap space, then I think this is an index that is definitely worth considering. Uh, and I just hope you have a good journey once you're invested in it.
That's a
Thank
great thing. I think the sorry, the end outcome which we all want is for our investors who are the end users of this particular product to be having a successful outcome out of it, and it would help them in achieving their financial goals aligned to their life goals. So I think in summary, I feel that this is a particular unique positioning for a large cap allocation, some particular allocation which in the past, historically from launch, what we see for a history of about 10 years or thereabouts, has delivered a alpha or a outperformance of about 2% versus the BSE Sensex 30, which is the large cap bellwether index, or similar other large cap bellwether indices. So a 2% outperformance in a large cap universe over a long period of time. And if you look at the last 10 years calendar year performance, we have seen that in 7 out of 10 calendar years, it has outperformed the BSE Sensex again. So I think with that objective in mind, one should also always keep in mind that yes, this particular index has historically demonstrated slightly higher risk profile as well. So it is positioned at a slightly higher risk and a slightly higher return profile expectation product. So keeping that aspect in mind, it's a good way to allocate into large caps. It's a good way, sitting today as per the valuation that we see, to get access to somewhat you can think of as a out of favor stocks available at relatively reasonable valuations. So with that, I urge you to kindly do consult with your trusted financial advisors or MFD or broker, or of course, if you are directly serviced by any of the DSPRM, do please consult suitably and then consider to take some allocations to this so-called out of favor stocks in a simple wrapper as an index fund or ETF, whichever you like.
Thank you. So I have some questions that we've received from the viewers. I will ask basis. Okay. So Anil, I think the first one's coming your way,
Sure.
and you've touched upon it while you were giving your closing remarks as to Sensex Next 30 seems to have higher volatility than other large cap indices. Should I still
Yes.
consider it? Is the question from one of our viewers.
I think that's a great point. And like I said, and we were very vocal about it. Even when we, Ashutosh and myself, we did the formal announcement and we did a press release that, yes, certainly this particular index, if we look at historical risk positioning, and when we look at risk, it's a standard definition of how we look at historical risk or the volatility or standard deviation of the particular index. Yes, from that perspective, it is relatively higher risk, but with a slightly higher return potential as well. Whereas it's not typically giving you that kind of a positioning of risk and return like a mid and small cap would give. But even if we compare it with various other large cap indices, it is slightly higher risk, but with a slightly higher return potential. So I feel that if you are advising a particular client, or if it is for your own self, whereby you are keen to take equity exposure, but you are not at this point of time very much comfortable, or you don't want to go down the curve into very mid cap, small cap allocation, then this can be a good sweet spot that, okay, this is large cap within that slightly lower, or the middle order of the large cap, hence slightly relatively higher risk and return position expectation. So I think that is how you should look at it, that yes, it can be a good way to park your money or suggest to your clients to park their money.
Ashutosh, the next one is coming your way. Is there a possibility of saying that Sensex Next 30 index serves as a barometer for identifying emerging large cap companies or companies that have the potential to move from the next basket to the largest basket
Super
of
point.
Sensex 30?
Great question. Great question.
Yes. So Gurjeet, I mean, Sensex Next 30 also is part of the large cap space. So for the most part, it will exhibit characteristics in line with the universe, whether it is liquidity profile or it is risk profile. Those characteristics will not be very far apart. But however, if I were to extend the discussion to saying that whether we've in the past, okay, I can only speak about what the past has done. So in the past, have we seen certain stocks move from this basket onto the bellwether Sensex index? It's happened in the last 10 years 20 times. In fact, some names that come to mind in the last couple of years are, for example, Adani Port, which is a part of, if this index was in existence, would have moved from Next 30 into Sensex. This happened just last year. You also had Dr. Reddy's move into this one, Tata Motors move into Sensex, Dr. Reddy's move into Sensex. So we've had 20 such instances in the last 10 years. So every rebalance, which happens every 6 months, we've seen on average about two stocks move into. So 20 stocks in the last 10 years, two stocks on average every year. Two stocks average every year move into the Sensex. Having said that, it could also happen that some of these stocks that graduate on to becoming Sensex constituents, do not stay there for extended periods of time. That can also happen. But yeah, I mean, we've seen a lot of stocks exhibiting good performance, price performance on the back of good financial performance move into the Sensex. So yeah, to that extent, I'll just repeat the point of potential, right? I mean, if in the last 10 years, 20 stocks have moved and the way the indices in India, especially the broad market indices are constructed, a lot of weightage is given to price performance, because then when the price moves up, the market cap goes up, and then the free float market cap also obviously moves up in line. So when this happens, you see these stocks graduate to Sensex. So yeah, to that extent, you could think that if they are there in Next 30, they obviously aspire. I'm sure most companies want to be a part of the Sensex index, being the oldest index, being the one of the most tracked indices, not just here but also globally. It's a pride of place for anyone to be a constituent in the Sensex. So to that extent, yeah, from a diversification standpoint, from the point of view of future potential of returns, it could make sense for people to consider this one.
Sure. Anil, there's a question which seeks clarification. The question is that the investor is already investing in the top 50 stocks. And
Okay.
then again, the next 50 stocks through the existing index funds that are there.
Yeah.
There
of
are
course.
funds which give you 50 and then next 50. Should the investor still consider to invest in Sensex Next 30? If yes, couple of reasons that he should look at.
I think great point. I mean, so look, I mean, to be very honest, for my personal investment, so I'll just mention, like, I do have some allocations into the 50 stocks, and then I have my monthly SIP which goes into the basket of next 50 stocks through a particular index fund. And whether this particular new launch of the BSE Sensex Next 30 will make sense. Well, like I said, when I went to the launch event which Ashutosh invited for, I had the exact same point के भाई ये क्या कर रहे हो आप, मतलब ठीक है हमारे पास है, मतलब I have got this 1 to 50 and 50 to 100. I mean, now what is the point of this separate small slice? But like I said, and we have a very excellent slide which anybody who's keen to read more, just go to our website, and it gives a very nice chart about this distinction. So the historic overlap with the top 50 and the next 50, or if you compare it with some particular bellwether indices, has been very low. It has typically been ranging between, let's say, for example, 12% to, let's say, around 25 to 30%. And currently, it is in the range of hardly about 17-18%. So by investing in this particular index, you will create some stock names which are technically overlap, but in terms of weightage, there is very small overlap, and hence you are being able to so-called own some of these underrepresented companies, which I just discussed earlier, that they are part of the Sensex Next 30. Certainly, they are part of both of these other index funds also, or ETFs that you might already be investing, or you are already having an SIP running on it. But your allocation or weightages to those is very different from what you will get over here. So thanks for raising this. In fact, I should have already covered it earlier, that it's a very common question everybody will have in mind. Today, indices or index funds on, let's say, Ashutosh's BSE Sensex 30 or some of the other like bellwether large cap indices are in existence for almost 20 years, basically, or beyond. I mean, and many investors have already been having SIPs running or lump sum allocations over there. So it's a very important question. Anybody will think in their mind that, okay, yes, I have this now. What will I do about that? So I feel very clear indication is that it will give a differentiated risk and return outcome.
Ashutosh, there's a question on how many stocks to generally get rebalanced during the reconstitution. Reconstituted, in fact, not rebalanced. So what's the kind of churn in terms of stock count that we see during the semi-annual reconstitution that you spoke about? And you also mentioned about the buffer that you have. So what kind of impact does a reconstitution work on this index? You are on mute.
Yeah, Gurjeet. So, like I said, the reconstitution happens twice a year. For this particular index, will happen in the month of June and December, and we follow very well-defined rules. I mean, for us, the universe is BSE Top 100, and following the rules, we select the next 30, which are not part of Sensex, and there has to be an underlying derivative linkage. So in December last year, since there were many stocks that are added in FNO, you did witness a slightly higher churn. Otherwise, from experience, for a basket like this, we expect the churn to be lower than 10% on the rebalance. So that's our experience historically also. And I mean, honestly, since they are mostly operating in the large cap space, where you do not suddenly see big downgrades happening, we don't see uh, you know too much churn because of also the buffer that we have in place. So usually it should be below 10%, unlike some of the other categories of indexes like factor and all, where you see slightly higher churn. In broad market again, in the large cap space, the churns are lower. And again, given that this is playing in the top 75 space in the country, coming from a top 100 universe, selecting 31 to 60, we expect the churn on this also to be in the region of about 10%.
There, Anil, there's another question, interesting one. Is if you have 100 rupees, how much will you allocate to large caps? And within large caps, how much will you allocate to Sensex Next 30?
In my view, it's a very subjective question, because depending on which particular life goal for which you are making this allocation, and based on your risk return outcomes or objective, this can be very different for everybody. Maybe I will just share my personal context, that how much, typically speaking, I do allocate to large caps. So let's say if I'm getting 100 rupee as a surplus investable from my monthly salary, as of now, approximately, I would say roughly at the back of mind, I think I would say about 60% or thereabouts is going to large cap. I have about like 20-25% going into mid and small cap, and some allocation going into like other than that, like ancillary product, like a gold, etc. So within that 60 rupees going to large cap, maybe I will consider to allocate, let's say 10% or 10 rupees going into this particular Sensex Next 30, basically. I'm being very subjective with my allocation, but I'm just sharing that the way in which I would look at my personal portfolio.
Another follow-up question on this is, should I go for SIP or lump sum in this fund? And what should be the holding period?
Sure. So I believe that structurally, for any equity allocation, unless it's for some very specific of your financial goal, typically speaking, you should have a relatively medium to long-term holding period, let's say 7, 8, 10 years type of a time horizon. Now, looking at that, structurally, I would recommend that for any kind of equity allocation, do a combination of SIP and lump sum. What I mean by that is, if you are convinced with the argument and logic that I gave, or corroborate further with your own justification or your own number crunching, that yes, sitting today in middle of January 2025, I feel that the relative valuation of large cap universe or equity as a large cap category in Indian markets is appearing relatively attractively valued, then put some component as lump sum as well. And for some component, continue as a SIP, which will go on as a core allocation. And this can be your sort of like tactical allocation. Yes, okay, if current level is saving attractive, let me put more in lump sum. Then again, diversify it over next couple of monthly or let's say fortnightly installments. Then again, if there is some such other event coming across, friends, in my view, if you look at equity markets today, we do have a couple of very important events which will be coming up across. We do have the earnings season of December quarter going on right now. More important than that, I believe, will be the full year financials. The FY25 earnings season will come up soon, and that's when people start trying to predict or forecast that how FY26 and beyond is going to look like, and how the earnings will stack up for the current level of valuation that I'm paying. So during those periods, again, possibly we'll get some kind of a allocation opportunities. So I strongly feel that the best way to go about is, if you are convinced that yes, currently is a little bit undervaluation, then do some lump sum, continue SIP, then again wait for some such lump sum allocation opportunities.
Yeah, I think we're almost at the end of the session. We still have some questions, but most of them have been in a way or other answered by both of you. So I would probably ask for your closing remarks.
So I'll just go with my first closing remark. Thank you very much. Whether you are watching this live or as a subsequent recording, I appreciate you taking time to listen to us. And if you've left a question, which, as Gurjeet mentioned, broadly has been covered but not specifically responded, we'll try our best subsequently in the comment section, whether you are on YouTube or any other medium, we'll try to put in a couple of lines of response as well. So thanks for joining. In summary, I believe today we are in a very unique positioning from equity market perspective. structurally, we have come across from a very sharp rally period of about 2.5, 3 years. In the midst of that, we have seen 2.5 or 3 months of some very healthy correction, if I may say it that way. In midst of that, if you have to allocate money today, one such pocket of opportunity, one such segment of equities, which I believe can be considered, would be large cap segment. And within that, there is this one layer of somewhat undervalued and under-owned, or in some way, I would say allocation, which is out of favor at this point of time. Hence, if you are looking to take some exposure to equity, do consider this particular idea, the index fund as well as ETF, which we are launching on the BSE Sensex Next 30 index.
So Gurjeet, Anil, Team DSP, I would like to extend my best wishes for this NFO. And I would also like to thank you guys for bringing this product to life. So while, as an index provider, I can create an index which is very appealing, which we believe has a lot of value. But, unless a mutual fund, is ready to walk the path, walk the journey with us and pick it up and take it to the investors, for the investors to then study, evaluate, and eventually invest in. A good index is a good index only in theory. So thanks for actually taking it to life and giving investors a chance to study, evaluate, invest. Thank you.
Thank you, Anil. Thank you, Ashutosh, for taking out time, and most importantly, to all our viewers for joining us on a Thursday evening. Wishing again a very happy New Year and a healthy year ahead. Thanks a lot. Thank you.
Okay, thank you very much.
Thank you all. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.